All right, let's get into it. Today, we're cracking open the closing report for the Indian stock market on December 29th, 2025. We're going to dig past the headlines to find the real story hidden inside just a single day of trading.
So on the surface, the market took a small step back. But a small dip like that can hide a way more dramatic story of winners and losers. So let's treat this like a little mystery, shall we? We're going to piece together the clues.
Okay, so where do we start? Well, with any investigation, you start with the big picture, the main facts. Let's see what the market did overall.
And here they are. You can see both the Nifty 50 and the BSE Sensex ended the day just a little bit in the red. We're talking less than 0.5% down for each. It's not a crash, it's a nudge. But why was it a nudge down and not up? That's the question.
But, that tiny little negative number, it definitely doesn't tell the whole story. It doesn't mean everyone had a bad day, not at all. This was a market of mixed stories, a real tug of war between different companies and sectors.
So, for our little market mystery, let's start with the first set of clues. The champions. The companies that basically swam against the current and ended up having a really solid day.
And wow, you can see some real strength here. I mean, look at these names. Tata Consumer Products, Asian Paints, Nestle India, all ending in the green. But the real star of the show? That one's right at the top.
Yep, that number belongs to Tata Steel. Think about that. Gaining almost 2% on a day when the whole market is down, that is seriously impressive. No question, they were the champion of the day.
And you know what? Tata Steel's big win wasn't just a fluke. It was actually part of a much bigger trend. Turns out metal stocks as a whole group were one of the top performing sectors of the day.
Okay, so we've got our winners. Now it's time to look at the other side of that tug of war. Let's check out the stocks that kind of stumbled and were the reason those main indices got pulled down into the red.
And here's the other side of the coin. You see Adani Ports, Trent, HCL Tech, they all took a hit. But the company that really felt the most pressure today, that would be Power Grid Corporation.
And just look at that number, down 1.83%. It's almost a perfect mirror image of our top gainer, right? In this push and pull, this is exactly why the market as a whole barely budged. You had one giant pulling up and another pulling down.
So the battle lines for the day were drawn pretty clearly. You had the winning sector, metals, on one side, and on the other, the losing sector was IT. And get this, for IT shares, this wasn't just some random bad day. It was actually their fourth day in a row of losses. Ouch.
All right, so we've seen the winners, we've seen the losers, we've seen the battle between the sectors. But what was that invisible force that just gave the losing side the tiny edge today?
I think it's time we solve this thing and finally unpack the why.
And there it is, the smoking gun. The analysis points straight to one big reason: ongoing outflows from foreign institutional investors, or FIIs for short. That, right there, was the tipping point.
So, you might be asking, what in the world are FII outflows? Well, let's break it down with a simple analogy. Imagine the stock market is a giant swimming pool. Think of FIIs as a massive hose, always pouring money from other countries into that pool. Well, today, somebody turned that hose down just a little bit. And with less money flowing in, the overall water level, which is our market, dropped just a tiny bit.
Okay, let's pull back and look at the whole picture again. We followed all the clues, right from those top-line numbers all the way down to the root cause. So let's wrap this all up into one key takeaway. What does this all really mean?
So let's recap the whole story. Today's market wasn't just down, it was a total battleground. On one side, you had the powerhouse metal sector, with Tata Steel leading the charge, trying to pull the market up. And on the other side, you had the struggling IT sector, pulling it right back down. And the tiebreaker? The reason the bears won by just a hair? It was that small dip in money flowing in from those foreign investors.
It really just goes to show you, right? A simple, everyday market report can tell this super complex story of competing forces. It wasn't just a red day. It was a dynamic, fascinating tug of war. And that leaves us with one final thought to chew on. If this is the whole story of just one single day, what kind of trend is the full week going to show us?